up 5%, and GrubHub up 20% as Dow Jones and Bloomberg now say that Uber's made a takeover approach to GrubHub in an all-stock deal. We're going to watch that along with our Deirdre Bosa. Deirdre, good morning.
Hey, Carl, and that's CNBC as well. We have matched that headline that Uber has made an approach to GrubHub, and this is according to a source familiar with the deal. As you said, the stocks of both companies are surging, and that soundbite from Dara Khosrowshahi, the CEO of Uber, is just a glimpse of what they've been saying over the past few weeks. Uber Eats has really been seen as a strength as ride-sharing falls off a cliff. Uber Eats last quarter grew 50%, but I would also remind our audience that Uber Eats is losing money. While ride-sharing is becoming more profitable, Uber Eats still isn't there. It lost more than $300 million in terms of adjusted EBITDA last quarter, but it is seen as a bright spot amid the COVID crisis, more and more people turning to food delivery. Now, Uber has said that they always want to be the number one or the number two player in a market in which Uber Eats operates. Now, there's some discrepancy between the data. Second Measure, which we use often, puts Uber as number 3 in the U.S. market. So a combination with GrubHub would certainly vault it into even the number 1 place, I believe, ahead of DoorDash. So it would be a big step up. And remember, too, that GrubHub has shown profitability in the past. So perhaps Uber could get there a little better with GrubHub's experience. But also remember that Uber has retreated from some of its smaller markets in terms of food delivery over the last few weeks, and it's really been trying to cut costs. We saw a massive round of layoffs. We've seen them unloading, for example, their micromobility scooter and e-bikes units. So it's interesting that you're seeing the stock pop 5%. Clearly, investors agree, and they see that Uber Eats is a bright spot and really a place where Uber can capitalize as its ride-sharing takes a huge hit from the COVID crisis, guys.
Hey, Deirdre, it's John. It strikes me that if this were to happen, it would dramatically alter the strategic chessboard for Uber. I think a lot of people had expected that if Uber is driving consolidation, it might be Lyft that Uber buys, but this would actually move it outside of that ride-sharing core, and it would also move further away, I would argue, from the automated driving story that some people saw as lowering Uber's costs and set up more of a two-front battle between the likes of Lyft and the likes of DoorDash. What do you see Uber's strategic strengths as being if it's engaged in that kind of a two-front battle?
I think Uber would probably tell you that autonomous driving is still critical to its future, so it's still focused on that. But I think what you mentioned, John, really speaks to the moment that we are in right now. There are so many questions about ride sharing. Even though both Uber and Lyft have said that they've seen some improvement over the last few weeks, there's major questions as to whether ride sharing ever fully recovers. Are they ever going to get back to that point in a world that puts an emphasis on social distancing? Will people prefer to take their own cars? Food delivery, on the other hand, that is seen as just increasing in popularity, in use amid the crisis, as more people don't want to venture outside of their house or even in a socially distant world. So it certainly does change the mix for Uber. But remember that this is a company that has always said it wants to be a platform for transportation, whether that's ride sharing, whether that's freight, whether that's food delivery, autonomous vehicles. So this does fit into Uber's thesis that it has been pushing for a long time. I do question the cost side of it. Remember, Dara Khosrowshahi just last week on Squawk Box and yesterday for Investor Day said that profitability remains a strategic priority. By taking on more of a footprint in food delivery, does that push that timeline further out? This is not a profitable business. They're going to have to continue to compete against DoorDash, which is a major player in this space. And they've been cutting costs on a number of other fronts. So I think that's a key question for investors, too. Where does this put the profitability timeline?